2026 is going to be completely different for property investors, and if you go into it using the traditional strategies, you're going to get left behind. In this video, I'm going to show you what's actually changed, what still works in 2026, and exactly how to win, whether you're just starting out or scaling your property portfolio. If you want to make 2026 your best year in property, this is the video you need to watch. Part 1. 2026 property market predictions. Before we talk strategy, we need to be clear on what the market actually looks like going into 2026. Here's what's shaping the market. Mortgage rates are stabilizing, but not falling fast. Interest rates are no longer rising aggressively, but they're not going back to the 1 to 2% either. Expect a new normal of 4 to 5% on residential mortgages and 5 to 6% on buy-to-lets. This means cash flow strategies need to be tighter than ever. Any uplift has to be real and deliverable, not theoretical numbers that only work on spreadsheets. The market is still price sensitive. Buyers are cautious, surveyors are cautious, lenders are cautious. Overpriced stock is sitting. Genuinely well-priced property is still moving. That creates opportunity, but only for investors who know how to add value properly, not those relying on market growth to bail them out. Structural shifts are continuing. Several long-term trends are still playing out. So for example, smaller households, which means increased demand for 1 and 2 bed units. Remote and hybrid working, resulting in demand for better layouts, not necessarily bigger homes. Leasehold reform. There have been some delays, but changes are coming. Rental demand remains at record levels, yields continue to strengthen. All of this points to one clear conclusion. Adding bedrooms remains the strongest and most reliable way to create value in 2026. Part 2. Autumn budget impact. Now let's look at what the autumn budget actually means in practice. Not the headlines, but how it affects investor behavior and opportunity. Stamp duty relief staying where it is. Stamp duty relief remaining unchanged is positive for first-time buyers and investors purchasing smaller units, particularly 1 and 2 bedroom apartments. This supports demand at the lower end of the market, which is exactly where many value-add strategies sit. No major landlord tax relief changes announced. There were no significant new restrictions or tax shocks for landlords. That matters because stability brings confidence. Confidence brings activity. When investors can plan without fearing sudden rule changes, they're more willing to transact. Capital gains tax changes. Lower CGT rates increase the incentive for some landlords to sell rather than hold, particularly older portfolios, tired stock, and properties no longer performing. That doesn't mean forced sales everywhere, but it does mean more motivated sellers, which creates opportunity for buyers who are ready to move quickly. Energy efficiency expectations are increasing. Stricter EPC requirements aren't law yet, but the direction of travel is clear. This is a positive for investors who refurbish anyway. EPC improvements are already built into the works. Poorly performing stock becomes more negotiable, and refurb-led strategies gain an edge. 2026 is shaping up to be the year of buying tired stock, upgrading it properly, and refinancing into a stronger, more stable market. Part 3. What still works in 2026? The proven strategies. If you want predictable results in 2026, these are the strategies I continue to recommend. Converting 1-bedroom flats into 2-bedroom flats. This remains one of the highest return on investment moves in UK property. It's relatively low cost, low risk when done correctly, and there's strong demand for 2-bed units. Typically, the uplift can be between £80,000 to £150,000 in London. Fast turnaround compared to larger developments. This is a strategy that works both for newer investors and experienced operators. Converting 2-bedroom houses into 3-bedroom houses. A well thought out reconfiguration can dramatically improve both value and rental income. In many cases, you're not extending, just using the existing space more intelligently. Demand for family-sized rentals remains strong, and the uplift often outweighs the cost by a significant margin. Converting single houses into flats. This is a mid-level strategy, more complex than simple refurbishments, but highly scalable. It works particularly well in commuter towns, areas with strong rental demand, locations where smaller units outperform houses on yield. Mixed-use commercial to residential apartments. This is a higher risk, higher reward strategy and best suited to experienced investors. It works in 2026 because commercial property prices still remain suppressed. Permitted development rights remain favourable and residential end values continue to hold up well. For investors with the right team and experience, this is where scale can happen quickly. Part 4. How to win in 2026. This is how you should stay ahead while everyone else hesitates. 1. Focus on January to March for opportunities. The first quarter of the year consistently presents some of the best buying opportunities. Motivated sellers resetting expectations, fresh stock coming to the market, and less competition from hesitant buyers. This is often where the best discounts appear for investors who are ready to act. Add a bedroom wherever possible. Adding a bedroom remains the fastest and most reliable way to create equity. Whether it's reconfiguring a flat, optimizing unused space, or improving layout efficiency, bedrooms drive both value and rent, especially in a price-sensitive market. Know your pipeline inside out. If you're doing reconfigurations, you must have clarity on the freeholder consent process, floor plan viability, the realistic valuation uplift. This is where most investors go wrong. They rely on assumptions rather than certainty. 4. Use professional comparables and a surveyor pack. This is how you reduce the risk of any down valuations, providing clear before and after photos, a schedule of works, and relevant sold comparables. Makes the surveyor's job easier and helps support the valuation you're aiming for. 5. Move up the pyramid when you're ready. Start with low-risk strategies, repeatable refurb and reconfiguration projects, then scale into more complex conversions, larger developments. The goal isn't to rush, it's to progress deliberately. 2026 isn't about waiting for the market to recover, it's about executing proven strategies with confidence and precision. Why speed matters in 2026. One of the biggest differences between investors who can win in 2026 and those who don't isn't capital, it's speed and clarity. Most deals don't fall over because they're bad deals. They fall over because analysis takes too long, information is scattered, people don't know what to check next. That's exactly why I'm launching a new platform built specifically for property investors. It's AI driven, but it's not in a gimmicky way. It's designed to reduce the time it takes to get from opportunity to execution. The platform includes AI-powered modules to analyze floor plans against my proven criteria, tools to compare bridging finance quotes quickly and objectively, pre-built investor-grade email templates for brokers, solicitors, and agents, step-by-step guidance for things like freeholder consent, which is where many projects stall. There isn't another platform that brings all of this together in one place. I'll be sharing more about this shortly, but the key point here is that in 2026, the investors who win won't just find good deals, they'll execute them faster and with fewer mistakes. Part 5. The free download, Property Strategy Decision Tree. One of the most common questions I get asked is, Rab, where should I start? What's the best strategy for my situation? That's exactly why I've created a free property strategy decision tree. It's built around real decisions investors make every day, not theory. It walks you step by step through your budget, your risk appetite, and your experience level, and shows you exactly where to start and which property strategy makes the most sense for you. Whether you're working with £20,000, £50,000, £150,000 or more, this decision tree helps you avoid guesswork and focus on the smartest, most appropriate strategy for your situation. If you want to make 2026 your best year in property, download the Property Strategy Decision Tree. Study the strategies we've covered and make sure you watch my next video, where I break down the biggest trap UK property investors fall into and how to avoid it. If you're interested in the AI platform I mentioned earlier, designed to reduce the time it takes to analyze deals and execute projects, you can drop me an email at contact@ravinderorjala.com. and I'll add you to the list if you'd like to see what I'm building behind the scenes. And don't forget to subscribe.